I was just speaking to Yomi just before this, and he more or less suggested the obvious, really. Very little in terms of news flow for the rest of the year. So in this context, how are you investing in these markets? We've seen yields come down in the fixed income space over the course of this year. Going into next year, I think some people are suggesting that we'll probably see things flatten a bit. So in this context, how are you investing in this market?
I think the first thing to start with is definitely is not so much about what is going to happen for the rest of the year. The fund manager will just take a forward view of definitely what is going to happen next year. It's been pretty much interesting what has happened throughout this year. At the start of the year, I think general consensus estimates for equities was about maybe tops of 12 to 15% close.
And we've beaten that by far.
And definitely by the end of the year, even if you just have a little bit of retracement, I'm thinking maybe about 25% at the close. Then yields on fixed income, right, from 16% thereabout at the start of the year, seeing 12. Now, to balance that match off, depending on the sort of fund you're managing or your own portfolio as a fund manager, you could be taking some profit on your fixed income investment and just positioning for equities now.
So you expect a rally going into next year into the equity space?
Yes, I expect a bigger rally, but maybe not so much as what we got in about 2007 and thereabout of like the 74% at the end of the year. The other thing is, which is quite interesting, is expectation of inflation, because that was one of the key things at the start of the year. A lot of analyst reviews just speculated that we're going to close this year about 13.5%, 14%. Now, from the way it's looking, I don't think we'll just close anything north of 12% at the worst, which will sort of put less pressure on sort of yields being expected from fixed income. Now, if that it is, and increased liquidity, such as we've seen more interest on the PFE side coming into the equities market, we expect that to drive equities forward a bit.
What about alternative investments? The real estate space, for instance, clearly there's been, you can call it a mild recovery, but clearly it's much better than where we were in 2008, 2009. So is that a space that fund managers are also a bit bullish about going into next year?
Yeah, most definitely, because real estate is something, and you have to bear in mind the sort of culture we have. Holding on to tangible assets and seeing your investment is something that is quite key in this sort of market. And the demography and the sort of shortage you have in terms of real estate investment is something you have to key into. Depending on your outlook or the kind of fund you run as a fund manager in terms of real estate is something that has never gone out of fashion and will keep being prominent. However, you have to know it's capital intensive, so access to capital is something else you want to bear in mind by the time you're being bullish. And this sort of, it's like greenfield or something like a turnkey, something you want to have.
Moving back to the macro space, GDP Q3 was 6.5% thereabouts, and quite disappointing what we've seen in terms of growth this year. Going into next year, I think some people are slightly more bullish, but I think another major concern on the macro side is the exchange rate, and I want to know, how concerned are you about where the naira would be going into next year? This year it has strengthened slightly. Your thoughts about next year and how that impacts your investment going into next year?
Well, for foreign exchange, like you know, that the foreign exchange reserves have been growing, I think about 30% year to date. That's quite very good. And the sort of policies you have coming out of CBN is to strengthen and to maintain, at least stabilize the naira. And over the last couple of months, we've even seen a stronger naira, as it were. And all the mechanics that could cause maybe scary fluctuations, I believe, have been taken care of by the CBN. So it's not so much of a huge concern. Now investors and foreign investors are less worried about internal policies that will affect fluid transmission of their currency, of their investment in their own currency. So it's not so much of a huge concern for me as a fund manager.
So you're cautiously optimistic going into next year. How will you describe next year in terms of an investment opportunity in this market? What theme would you be going into?
Next year, I think is going to be pretty interesting. I think there's going to be more investor confidence.
So excitement.